Hey, what's going on YouTube? So in this video, I'm going to show you how to use the NACA mortgage program to purchase your very first investment property. Now, if you are unfamiliar with the NACA mortgage program, they advertise no down payment, no closing costs, no mortgage insurance, no consideration of your credit score, and below market interest rates when it comes to your mortgage and your home loan. So of course you can see how advantageous this program is going to be for you if you're looking to invest into American real estate. So in this video, I'm going to break down how to use the NACA mortgage program in 5 simple steps to purchase your very first investment property. Now, before I do, my name is Art Smith. Welcome to this channel where we focus on educating consumers on their financial options so that you could avoid predatory lending practices from institutions and individuals. So if you're looking for straight to the point, no BS financial information, do me a favor and subscribe to the channel. And if you feel like I'm doing my job, do me a favor and smash that like button so that YouTube knows that this is good content and it can be shared and distributed to more people just like us. And if you have any recommendations on what you want to hear about next when it comes to finances, do me a favor and comment below with your recommendations on my next video topic. Now let's jump right into how you could use the NACA mortgage program to purchase your very first investment property. Now, step number 1 is going to be registering and completing the NACA workshop program. Now, this is even easier to get done because now you could register and complete the workshop via their online portal or online workshop. All you have to do is go to NACA.com and register your profile for free, and then this could be done in the comfort of your own home. Now, the online workshop consists of 5 different modules, and each module will have a test at the very end to make sure that you are following the lessons and obtaining the information that NACA wants you to obtain. Completion time for the online workshop should be no more than 3 to 4 hours, and this could be done on your time and at your pace. So if you want to complete one module every evening, this could be completed in the next 5 days. However, if you want to just go through all the modules in one sitting, then this could be completed in the next 3 to 4 hours, as long as you are diligent and making sure that you are attentive to the material and passing the exams on the first go around. Now, once you complete the online workshop, then you will receive your NACA member ID number, and that's what you're going to use in order to register for a NACA membership. Now, being a NACA member isn't free, however, it isn't expensive at all. In order to be a NACA member plus pulling your credit, it shouldn't cost you no more than $50. Now, once you have completed the online workshop and have your NACA member ID and you are now a NACA member, now step number 2 is to submit all of your financial documents for review via the online NACA membership portal. Now, this is going to be a very important step into you getting qualified and being eligible for the NACA mortgage program. So you're going to want to have all of your bank statements for your checking and savings accounts, whether you own the bank account separately or jointly, as long as it has your name on it and your social security number attached to that bank statement or that bank account. You're going to want to submit those documents for the NACA mortgage program. You're also going to want a copy of your credit card bank statements readily available, any and all income documents, pay stubs for the past 2 to 3 months, your W-2s for the past 2 years, and or your 1099s for the past 2 years as well too. All of your debts are going to want to be accounted for aside from the credit card statements as well too, student loans, your personal loan statements, as well as your auto loan statements. These documents are going to need to be submitted as well too. Any other income documents are your savings accounts like your 401k accounts, any child support or alimony payments that you are obligated to pay as well too, and any other income documents like your retirement accounts, disability income, and even your social security income if you are of age. Of course, you're going to want to submit all of those financial documents into the online portal for financial review. Now, once you submit all of your financial documents, then you will be assigned a counselor where they will review all of your financials and determine your eligibility into the NACA mortgage program. Now, if you get the green light to move forward with the program, then you're going to be prompted into step number 3. And step number 3 is going to be looking for 2 to 4 unit multifamily units. Now, this is going to be crucial because if we're looking to invest into American real estate, it is really hard to do on the NACA mortgage program with just 1 unit, because in order to stay compliant with the NACA mortgage program, you must occupy the residence the entirety that you have the NACA mortgage. And if you decide to move out, then unfortunately you are not compliant with the NACA mortgage program because you must maintain occupancy for the duration of this whole entire mortgage program or the whole entire length of your term. So if you want to invest into real estate and use the NACA program, it's going to be crucial for you to have multiple units because you'll be able to occupy that first unit and then rent out the second, third, or potentially even that fourth unit. Now, the great thing about using the NACA mortgage program in order to invest into real estate is when you do find your multi-unit property, then at that time, you will not be obligated to put a down payment. You will not be obligated to pay closing costs, and you will have a low or below market interest rate when it comes to your overall home loan, making it very advantageous for you to acquire a piece of real estate where you're able to receive monthly cash flow or monthly income, be able to capture depreciation on your tax returns on an annual basis, having the other tenants in the other units pay down your mortgage, and gaining appreciation on an annual basis as real estate values start to climb every single year. So after you find that 2 to 4 unit property, then step number 4 is going to be calculating the numbers. Now, at the time of me shooting this video, NACA does have purchase limits from 1 to 4 units. 1 unit is going to be $484,000 in most states. In higher cost areas like California, Hawaii, New York, DC, Maryland, just to name a few, the maximum limit for a 1 unit property is going to be $726,000. For 2 units, lower cost areas is $620,000. For higher cost areas is $930,000. For 3 unit properties, lower cost areas is going to be $749,000. Higher cost areas is going to be $1.1 million. And for 4 units, lower cost areas, the limit is going to be $931,000 and change. And for higher cost areas, you could go all the way up to $1.4 million. Now, when calculating the numbers, it is very important to know that the maximum DTI, or the maximum debt to income ratio, on the front end is going to be 33% and on the back end is 45%. So on the front end, which is going to be that 33%, this is going to be inclusive of your housing payments, so your principal, interest, taxes, and insurance. And on the back end, which is going to be that 45%, this is going to be your housing payments plus any consumer debt that's going to be found on your credit report. So your credit card payments, your student loan payments, your child support, alimony, if you have that or if that's applicable to you, and then your car payments as well too. And that's going to make up the overall debt to income ratio, which is going to be that front end plus that back end. So here's an example of how you could calculate your maximum debt to income ratio when purchasing a multi-unit property. So let's just say that you found a duplex and you want to calculate the numbers on this specific acquisition. Let's just say that the duplex is priced at $500,000 and you want to use a NACA mortgage program in order to purchase this property. That's going to require 0% down. So that means that your overall loan amount for this acquisition is going to be $500,000. That's going to be stretched out over 30 years or fixed for 30 years. And let's just go ahead and use a 6% interest rate as an example for this acquisition. Property taxes is going to be around $520 per month, and your homeowner's insurance is going to be around $200 per month. And this is just going to be for this example. So for a $500,000 loan at an interest rate of 6%, your total monthly obligation or mortgage payment is going to be $3,718, and that's going to be inclusive of your principal, interest, taxes, and homeowner's insurance. Now, the great thing about the NACA mortgage program is that you do not need to purchase mortgage insurance in order to close on this acquisition. So we're not going to be calculating any mortgage insurance. So your total monthly obligation is going to be $3,718. Now, again, we're going to be purchasing a duplex. So let's just go ahead and say that you rent out that second unit for $2,000 on a monthly basis. So how calculations work when it comes to acquiring investment properties is that the lender will allow you to use 75% of the projected monthly income to offset your income and debt expenses when it comes to your DTI ratio. So if you are projected to receive $2,000 on a monthly basis from the tenant on this duplex or 2-unit property, is the lender will allow you to use 75% of that projected income. So that's going to be $1,500 that they'll allow you to use to offset your monthly mortgage payment. So $3,018 minus $1,500 is going to equal $2,218. And this is what you're going to be obligated to quote unquote pay or obligated to show income off of in order to qualify for this NACA mortgage program. Now again, our front end ratio is going to be 33%. So $2,218, divide that by 33%. And now you're going to need to show a monthly gross income of $6,721. Times that by 12, you're going to need to show $80,000 on an annual basis, $80,654 to be exact, on an annual basis as far as your gross income, in order to qualify for a $500,000 mortgage at a 6% interest rate and purchasing a duplex using that second unit and that income to offset your overall debts and income when it comes to the calculations for obtaining this mortgage and for this example. Now again, this is just an example off of a duplex. If you have a 3-unit or 4-unit property, you could use the additional income from the 3rd and 4th unit to offset some of your income and your obligation in qualifying for a mortgage. But this is just an example for you to understand how you could calculate the numbers on your own, that your counselor and mortgage professional via the NACA mortgage program will help you figure out throughout the process. And if you have a specific scenario just like this that you want to run by me, do me a favor and drop that scenario in the comment section below, and I'll be sure to either reply to your comments or make a separate video that outlines how you could use the NACA mortgage program to qualify for a mortgage in your next investment property. Now, step number 5, which is going to be the last step, is going to be closing the deal. Now, with the NACA mortgage program, since you're going to be financing 100% of the acquisition, this turns off sellers and real estate agents into accepting your offer just because they are not accustomed or aware of how the NACA mortgage program works. Now, NACA's closing time frame is going to be anywhere from 35 to 60 days. So competing with buyers who are either paying all cash or not obtaining a 100% finance mortgage is going to be a little bit more competitive, and it's going to be at your disadvantage. So here are some tips to closing on your next investment property using the NACA mortgage program. So number 1 is going to be shopping for homes that are 30 days on market or longer. Number 2 is going to be paying for their closing costs. So the great thing about the NACA mortgage program is that they pay for your closing costs, and they could potentially pay for the seller's closing costs as well too. And tip number 3 is going to be releasing some of your contingencies when it comes to submitting an offer. All right, guys, those are my 5 steps into acquiring an investment property using the NACA mortgage program. Do me a favor, if you have any questions whatsoever, drop your questions in the comment section below. And of course, if you haven't done so already, do me a favor and subscribe to the channel, especially if you're looking for straight to the point, no BS financial information. And if you found this video helpful, do me a favor and smash that like button so that YouTube knows that this is really good content and it can be shared and distributed to more people just like us. Thank you for watching this video. You are truly appreciated, and I will see you on the next one. Peace.